Okay, good afternoon, everybody. This is Dennis Wilburn. I want to welcome everybody to this session on the how to make money trading stocks and options, and plus a trading tip. I got a really good trading tip for you today that I want you to just take a look at. Okay, that's a trade I'm looking at doing for the premium hour with IWM. IWM just BlackBerry, no kidding. Okay. So, okay, yeah, we'll take a look at that as we run through, but we're going to keep it under, engaged and working through today's sessions. I want to remind everybody that all we do here is for trading purposes only. All traders are expected to paper trade any new method prior to the risk of their own personal capital. And I want to remind you, we're going to do three things today. One, we're going to cover the indexes. Because active trend trading is a clear and simple system designed to maximize profits, minimize losses. And if you're in one of our services, if you ever have any questions, just drop me a note. If you got my text, you've got my phone number, you can text me, and I do get back to you when you give me a call. We're going to do a real quick market index review. We're going to do a master trading tip follow-up, and then we got a pick of the week. I think Steve was saying that he's liking NIO or NIO or NIO. It's the Chinese equivalent, supposed equivalent to Tesla, and we'll take a look at that. Also, I'm liking CRM for a potential pullback and a move up prior to earnings. And so let's go ahead and get into today's session. So how to become, and here's your trading tip for today, how to be an efficient, effective, and consistent trader. Rule number one, or step number one, is don't try to follow too many stocks and or ETFs. Be selective. If you are working for a living, which majority of us are working for a living, you want to have to remember, you don't want to spend all your time trying to chase down stocks. It's one of the things that we do with active trend trading is we have several corrals, like we have 3 corrals of stocks and ETFs that we follow, but we keep it manageable because, we don't want people to get burned out. We want people using a really good system that works. So rule number 2, design a routine that matches you. And then when you finish the routine, be done with the routine, have your orders in place, go have a glass of wine, go do whatever you're going to do, go play golf, go for exercise, whatever you're going to do. But basically break off the market at that point and just relax and, recreate. One of the things that's really interesting, I'm doing, after my back recovered, I had started on Noom, N-O-O-M program. I lost 30 pounds. But I still haven't hit my target, which is about 20 pounds away. One of the things that they talked about was in their changing your habits, which is very cool. Is basically related to changing your habits so you trade better. They said that you have to get enough sleep, you have to get enough rest, because if you don't get enough rest, actually it slows your body down, causes you to eat more, and also it gives you a deficit of about anywhere from 300 to 500 calories per day that you either take more food in or don't burn as much. And so that's not a really good equation if you're trying to lose weight. And so again, you want to design the routine about and then be done with it. Number? Be committed to your rules and process. Follow a system with a winning edge is more important than having a goal to make a certain amount of money. Some will understand that, some won't. Keep going until you do understand that. It's not about the amount of money. Money that you can't say, I want to make $20,000 this year. It's great to have that goal, but focus on the goals of trading your system with an edge, becoming a master of that. The money then will take care of itself. And it's not about being profitable on a single trade. I've been watching a fine group of option traders on a Facebook group, and they get, a lot of them, the younger guys get all jazzed about, oh, I got it, I made $3,000 on this one trade, blah, 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 blah. However, they don't take into consideration it's the whole body of work. You have to have, like 30, 40, 50 trades in order for you to see that your probabilities of your edge are in fact working. So let's keep that in mind. And the last one I like, if you're not journaling, start journaling. If you're joining us on YouTube, there will be a link in the YouTube page about how to find a great journal that was designed by my son, Brandon, and it's one of the top sellers on Amazon. So let's go ahead and jump into a review of, here's what we did last year. Here's where we're sitting today. We're up about 2.7%, and we'll see if we continue to go in the grace, the proper direction. Thank you, Mike. I'll pass that on. So let's take a look at the indexes themselves. So let's start with the S&P. Let me go get my drawing tools. The S&P, as you saw on the left, is the weekly chart. On the right is the daily chart. And I'll highlight what we're doing on the daily chart on the right. We are operating within this really nice little channel, uptrending channel. We're up towards the high of it, so we would anticipate some kind of a pullback, to basically come back down into the lower level of the channel, or take a look at what moving averages is being respected most by the S&P. And that happens to be right there, the 20 and the 34. And so if I was going to plan a trade on the S&P or the spiders or their derivatives or the leverage ETFs, I would look at those levels and for planning a trade. And when I say those levels, guys, here's a little trick and here's a little tip to be aware of. And that's, as time goes on, as long as the prices keep going up, the slope of those moving averages continues to go up also. So like by Monday, the 8-day moving average is probably going to be about 381, and the 20-day moving average is going to be about 377. So when you're planning ahead, plan for where the moving averages are going to be based on the current trajectory. And we do that until the trajectory changes with a shift in momentum. Now, are we going to get a shift in momentum? We shall see. We do not really have a reversal signal here on the SPYs, although it looks like the momentum on the TSI and also market forecast is just kind of hanging out, slightly below the 90 level. On the weekly chart, it basically, we do have negative divergence, however, no reversal signal yet. Last one is the Qs. Now the Qs, and by the way, all the indexes are now, negative for the day on the Qs. It also was working inside of a channel. It broke above the channel. Oftentimes that is a indication that it's not going to be able to sustain that type of a move. Another thing, and I've shared this with several folks, IBD ran a really nice article that talked about the NASDAQ. The NASDAQ, if it gets extended around 8%, somewhere between 7 to 8% above the simple 50-day moving average, that there's a tendency, or there's a stronger probability that you're going to get a significant correction, or at least a correction back into the moving averages. And for the time being, until we get a violation and a cross back down of the 8 and the 20, I have to just say, hey, play the pullbacks until they stop working. And at this point, Yeah, pullback would be down here to this breakout area, 319, or down in between, let's say all the way to the, I would say 316 or 317 on the Qs. What else we got going here? IWM. Okay, IWM is the only index right now that is working under a bearish reversal signal. That happened on yesterday, when on Thursday, where we had a spinning top the previous day, and yesterday's body totally encompassed that spinning top, and also the day before. So what am I looking for in the S&P? TSI has already crossed over on the daily chart to the downside. Market forecast is starting to bend over so slowly, or roll over so slowly, it doesn't look like you're going to get acceleration. Even with this move down in the TSI, it's still providing us the potential that all we'll get is a pullback down to the 205 level, or maybe even the 207 level. And then on the weekly chart, a spinning top, at the breakout level, TSI and well, the market forecast started to roll over a little bit. And so at this particular point in time, what I can do is I would potentially look at, if I wanted to go into the weekend, not knowing what the weekend would bring, I'd be looking at doing a potential trade on IWM with probably a bearish, credit spread. That's basically, that would mean I'd be selling a call credit spread if it basically at probably about the 214 level, but we'll talk about that a little bit more on the premium members. And so that's what I've got, Steve, for the indexes. I'm bullish.
Yeah, I pretty much agree with your comments.
But I'm bullish, but I need a pullback. I could, and in order for me to switch to being more, downside focused, I've got to have a significant hard break of that 20-day moving average.
I agree. I agree. I think it can go either way right now. What I think is particularly bullish is I'm still finding a lot of stocks that I watch, mainly the IBD 50, that are still giving me setups. And I notice when the market rolls over, the setups tend to disappear, whereas they're still showing up right now, and it's a little bit of a bullish kind of flavor to.
Okay.
My
so what stock are you going to talk about today?
I think I like NIO a lot.
NIO, right?
It's not in my classic watch list. My watch list is basically the IBD 50, and I throw a few other things in. NIO, because the electronic vehicle space has been so hot recently.
Right.
And I really like the pullback that NIO was showing us, and I think breaking out of that pullback today.
Okay.
So I think into the close today, anytime today, into the close would be a long entry that I would like to take.
Okay, and earnings coming up on that on 3/17 after the market.
Yeah.
Some of us don't trade Chinese stocks,
right?
And that's cool too. Let me give you a.
Well, I think in support of that notion though is this week, last week GM and this week Ford got involved with EV activity, and they've just gone ballistic to the upside.
Yeah.
So I think it makes sense to trade something like NIO, which is.
Now, where would you put your stop loss on this?
I would go right under to yesterday's low.
Okay, so if you go right under yesterday's low, that's give you a stop loss of about 8.74%. So just take that into consideration for your risk profile.
Right.
For anybody who's trading it, another, and that makes total sense. You could also go right below the 20-day moving average right there. And so if you don't like NIO, and NIO's got really good shaped up, patterns, Steve. And so it looks fairly good. gives you a nice upside potential of probably 41 and then 64.
At least to the 66.5 area. Yeah. The
Yeah.
upper Bollinger Band. Yeah.
And so, yeah, right. And those are Keltners.
Yeah.
66.46. So if
Yeah.
you don't like that one, guys, here's just hang around. We'll find another one for you. Now, I like also CRM. I like CMR for a couple of reasons. One is we have earnings coming up on 2/23 after the market. TSI on the weekly chart is crossing up. The market forecast on the weekly chart has not crossed up yet. I will not buy it bouncing into the 50-day moving average. And so what I'd be looking for is a pullback into the 820. And again, where is that going to be? It's going to be at around 220, 221. This may be one that would set itself up for buying a stock or doing some kind of a credit spread or a debit spread, buying a call debit spread in this case, prepping it to go into earnings, upside potential, clearly to that level there, about the 232 level. So there you go. You have two great stocks to look at. For you going into next weekend. Steve, thanks. That's
You're
awesome.
Welcome, Dennis. And I like CRM also.
And so, excellent. Thank you. And so, hey, if you are looking for 5 of the best stocks you can trade, I would call them super growth stocks. I put up my top 5 list every week. This week's list, we put our orders in, but we did not get filled on any of them. We did not get a deep enough pullback. But we'll be recalculating and putting that out prior to the end of this week. And right now, here's where we're sitting on what we put up this year so far, going back to what we carried forward from last year and the first part of this year. So I'm pleased with that. And so if you want to know about how to, get on the autopilot and engage, just click the switch and you can either, there'll be a link down in the YouTube channel, or just also put a link in the when I send out the email. The other thing that we have coming up that I'm really excited about is and we did a presentation on this on, I think, Wednesday night for the training session, is the leverage ETF autopilot system, which is going to focus strongly on wealth growth going through the rest of this year. And I truly believe, I'm 69 years old, and I truly believe that you're neither too old nor too young to not think and not develop ways of generating wealth. And so that's what we're doing with that. If you were on that training program for the premium members, you saw that those are pretty significant moves. And we just, we're watching watching them closely. So, anyway, I know what we forgot to do. Barry wanted us to take a look at. Barry, do you want to take? Yeah, BlackBerry BB. Let's take a real quick look at BB, and I'll then close us out. I want to go over here first. What do we got going on? First, I'm going to jump over here. My research tab, I go to stock checkup. Here's where I always start. When everybody asks me a question about a stock, I always go over here and say, okay, if it's not on my list, I want to know what kind of, and right now it's not coming up. Oh, maybe it is coming up. BB, there you go. BlackBerry Limited. It is number 9 in a group of stocks that includes Apple, DocuSign, apps, DocuSign, 5, and it has a composite of 93, not too bad. We like the composite to be over 95. And if I go, and I just look down here really quickly, it's got a lot of red showing. Now, it doesn't mean that it won't take off. If you know something about it, that's where you need to, be, looking to trade it your own self, because you may know, hey, this particular stock is going to come out with XYZ widget, and it's going to, something's going on with this particular entity. Just looking at the chart, I mean, it took off. It's gone up over 100% since the beginning of 2020, from $6.60 all the way up to $13.70. Barry, you got an idea why it's doing that? Oh, okay. A lot subtle. So is that going to open the door with them to be able to do more, more business? So anyway, so yeah, that looks pretty good. But if that's just simply a news related thing, I'd be very careful with it. Yeah, so, okay, cool. If they're having some big changes, then this may be just the early indication that things should get better from here. So hope that helps. And again, because of the rating on it, Investor Business Daily wise, I wouldn't be taking a look at it. But if you know something that you've already been following it, more power to you. It looks like, I like the patterns. So, okay, that's it. Hey, Steve, thanks for joining me. I know that you're going to be doing a live webinar also, I think starting about right now.
Yeah. Yeah, it's just a group of us be getting together almost daily. It's kind of open.
Okay.
If anybody wants to be involved, want to check it out, send me an email.
Okay, awesome.
Contact.
So anyway, looking at 2021, reset and wealth building. And as usual, just keep growing the egg, trade well, prosper. Final hour guys, premium guys will be back at the top of the hour. Jeff, I'll send you the email on that. And, from my home to yours and our home to yours, aloha, trade well, prosper, keep sharpening your saw. And mahalo. God bless everybody. See you next week.